Still in Nigeria, a sudden announcement by that country's central bank has now limited the flow of remittances to the country to just three entities: Western Union, MoneyGram and RIA. That decision now leaves millions of Nigerians abroad with very limited options for sending money back home. It was only 3 days later that the central bank made a public explanation for its actions. In a statement earlier on, they argued that it was triggered by, quote, unwholesome activities of some unlicensed international money transfer operators, end of quote. When I spoke earlier to World Remitt's Alex Murphy, one of the firms affected, and CCTV's Deji Badmus, it emerged that the CBN's other motive is tapping into the over $20 billion of remittances that flow into Nigeria every year.
At this current point, what we know is that starting over the weekend, we were contacted by our partners in Nairobi, so payments networks, banks, our correspondent partners in the country, in Nigeria, that informed us that they were being informed on an individual basis that they must stop international money transfers immediately with any other partner other than the three main companies: Western Union, MoneyGram and RIA. Since that point, late last night, the Central Bank of Nigeria has issued a statement saying to the same effect that all money transfers to Nigeria must cease immediately, with the exception of these three companies that are operating currently to Nigeria.
Deji, let's follow up on that. What reasons has the central bank given for cutting all means of sending remittances, except, of course, for those three companies, Western Union, MoneyGram and RIA as well? Because the statement just says that this move is, quote, necessary because of the activities of some unregistered IMTOs whose modes of operation are detrimental to the Nigerian economy. That's pretty vague.
Yeah, I mean, you're quite right. The CBN has been pretty clear about this. What the CBN says is, look, there are basically three licensed IMTOs in the country, and that's Western Union, MoneyGram and RIA. So the three of them are licensed to operate in the country. World Remit, for instance, is not a licensed IMTO in this country. And part of the reason why I think World Remit was cut up by this is that the central bank came up with a guideline on the 22nd of July saying that all agent banks now to these IMTOs, that IMTOs, as a matter of fact, must remit foreign currencies to their agent banks in the country, and that these agent banks must sell the proceeds from these foreign currencies now to BDC operators in the country. I'm talking about Bureau de Change operators now.
Deji, let me just interrupt there. Alex, it seems at face value that this is partly a question of trying to increase dollar supply in the local market in Nigeria, but also a question of having World Remit domiciled physically in Nigeria. Is that something that the company would be able to do if it was to restore services in Africa's largest economy?
Look, we certainly couldn't speculate on the reasons behind this decision by the central bank. What we do know is that it is very sudden and, from what we can see, fairly arbitrary at this point, leaving very little time for companies, and I mean hundreds of companies, not just World Remit ourselves, but many companies who have been operating services to Nigeria for many years, suddenly being told to cease operating immediately, effective essentially early this week. That is extremely detrimental to the Nigerian economy, to millions of Nigerians abroad who rely on services to send money back to their loved ones in Nigeria. Those Nigerians within the country who are relying on remittances coming from abroad are going to see those remittances cut off. I mean, we're talking about over $20 billion a year that go directly into the Nigerian economy from individual Nigerians abroad. Those Nigerians abroad are now left with very little choice.
Deji, coming to you, I mean, Alex does have a point there. In other economies, we've seen that are big recipients of remittances, Kenya, Uganda, South Africa, the ability to have those inflows come in, that does tend to support the exchange rate against the dollar. Isn't this just going to work against the monetary policy and currency stability objectives of the central bank in the long run?
Well, Rama, let me just answer straight away by saying that, look, if you have these inflows coming in, if the inflows are not coming in hard currencies, I'm talking about in dollars and pounds. It just wouldn't make sense at all. And that is what the central bank, I think, is trying to avoid.
Part of my conversation earlier with Alex Murphy from World Remit and Deji Badmus in Lagos.